How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar. I wasn't able to get the update earlier out this morning, but we're going to get it out now. We can see today, Thursday. I know you guys can see the Friday candle already is open, but it's still currently Thursday night right now in New York. This candle finished down. And if you've been following me for a while, you know that I teach in a bullish trend. Ideally, it's best to buy after down close candles because in these down candles, we can take the educated guess or the assumption that the commercials are buying, right, or increasing their net longs in these down candles. Now, think about that for a second. If you had to buy, would you buy after another up candle or would you buy after another down candle? I would prefer to buy after a down candle because price has become cheap again. It's giving me an opportunity to get into the trend. Now, for those that don't have enough time to trade intraday, or those that are busy with kids, a spouse, a business, or you have a job, and it keeps you away from intraday trading, I would recommend you to trade on the daily chart or even the 4 hour, but I mainly like to do it on daily. Use a buy limit order at the close of that candle. So you're buying on weakness. So the price is going to come down and trigger your order and then push price higher. The other way you would buy on strength, buy with a buy stop order at that candle's open, and price is going to trigger you in long when price is going up. So that's buying on strength, and this is buying on weakness. I would prefer traders to buy on weakness because the market's going down. So I want to buy when the market starts to go down because it becomes cheaper for me as the buyer if I'm going to take that approach. As we said before, there's a buy side imbalance, sell side inefficiency, and there's a likelihood that there's a higher swing low forming here. If the market is truly going to continue to trend higher and go against the seasonal tendency, because we know the seasonal tendency of the chart said euro is supposed to be bearish. Oftentimes, it could be incorrect. Seasonal tendency could be wrong, and the market is going to go against that. And it said the DXY is supposed to be bullish for August. So we're going to see. So far, the DXY has been bearish. Not saying that is out of question, but we're going to take it day by day. And based on what the market is giving us right now, bullish momentum is here. Now, it could be a false break. This could be a smash candle sell for those that know. But right now, I do think that the fiat currencies against, right, the dollar crosses are going to gain strength most likely. Let's take a look at the DXY. You see the DXY did inverse, printed an up close candle today. And we can see already that Friday candle opened and it's starting to sell off. So in a bearish trend, it's ideal to sell after up candles. Just take a look at what we have going into the month. Look at this most recent up close candle. There's an up close candle here. And look at this huge sell-off. Went from a small range to a large cycle. Same thing could happen here. It's a Thursday up candle. Friday could be a large another range down, taking out the sell side here. Now we do have these relatively equal lows. I would like to see if the market sweeps that. Market likes clean lows. These are clean enough. I'd like to see if this market is going to get down here either by maybe today, Friday, technically tomorrow, Friday, or Monday next week or Tuesday next week. We'll see if price gets down there. Now let's take a look at some of the other pairs. That buy signal for the chat, that note for those that are in the chat, that buy signal, that I can't even speak. Larry Williams smash candle theory here, down close candle. So far, it's showing profit here. You see that? Let's move on. U.S. oil showing sell signal possibly. If dollar's going to decline, I want to see if U.S. oil declines too. Sometimes they aren't in sync in their correlation. Not worried about ACAD. UCAD's been declining. So you got up close candle, 2 up close candles. Let's see if today is going to sell off. Take out that swing low down here. I want to see if it gets down here. Take a look at that another day. Let's move on. We got GU. GU still trending up. GU is still trending. We recently had a down close candle. You can see it's creating that formation. Look at that higher swing low. Down close candle, they're most likely, commercials are most likely buying in that down close candle and pushing price up. Here Thursday today, same thing we just saw on EU. We got that busy. And price is what? Creating it literally just created the higher swing low. It confirmed it as well. So that's that higher swing low confirmed to that one. After rating out that sell side. So it rated here Take a look at it. It rated. I don't know why TradingView does that to me. How did you get to UJ? It's so funny. Um, let's go back. I have no idea why I did that to me just now. You can see how price rated that sell side liquidity pool here, and then look to revert back up to what? Buy side. And it just ran recently a swing high. Buy side liquidity pool here. There goes that higher swing low. So that's signs that the commercials are buying higher swing low. Let's move on. Got AU doing the same thing that GU did. It ran out some type of sell side here. Look at that swing low. So price came down and then ran up. Damn, my Instagram notifications going crazy. And then it's coming back down and then going back up and going down and then going back up. You see that? So price rated a sell side liquidity pool. See, it looks like bearish momentum, but it's just a false break. Because I tell you guys often, okay, price broke this swing point, so that's bullish or bearish momentum. So since it broke this swing low, that could be a possible sign of bearish momentum. But we know as traders, it could also be a false break. You see, going into August, they push price down heavily and push it back up. And they drop it below August's opening price. Look at that too. So this is the start of August here. This black dash line here. Look at how they bring it below the monthly open, drop it down into a cheap discount, and then they buy it back up. And similar signs. There was a sell signal here. I want to see if it's going to produce, whether it's short term or long term, there was a sell signal here. The whole point of a trader is to take speculation and to take calculated risk. You're not supposed to get your trades 100% right every single time. Yes, there are some people out here that are freaks of natures and they're hitting, 80% hit rate, 90% hit rate, but that's not the average trader. The average trader is not winning trades that often, anywhere from, 40% to 50% consistency or win rate. So if you don't have the highest win rate, you have to manage your risk. That's the only thing you control as a trader. You can't control the price action, but you can definitely control how much you lose. The yen crosses, looking to trade up. You had down closed candles. There was a smash candle buy idea for UJ here. You see that? Price trading up and away from these down closed candles. Because if the trend is bullish, buying after these down closed candles would be your best friend. We talked about that all the time. That's a counter trend candle. Counter trend candle. And we also are breaking swing highs with UJ. It's really interesting to see what's going on with the yen crosses. We have a lot of geopolitical tensions going around the world. A lot of wars are going on or just about to start again. We have a hiking cycle that's coming to an end. So a lot of the central banks around the world are not increasing the interest rates anymore. They're going to start cutting or they're going to leave it the same. And we have the Bank of Japan, who is most likely going to probably hike in the near future. They have recently, and we'll see how that is going to affect the yen crosses and the yen. Go down to AJ, you see it's trading up. Oftentimes, when you see those dollar crosses like AU, GU, NU, EU start to become bullish, you'll see signs of the yen crosses as well, like as the respected AJ, EJ, GJ, NJ, they'll go bullish as well. Not all the time, but you'll see some positive correlation there too. There's a buy signal still playing out for EJ here. Major play, major play, major play. This is a very profitable idea here. That's that Larry Williams. I don't know why I keep messing up his name. Larry Williams smash candle buy here. For those that know, no. GJ2, buy right there. That down close candle makes it look like it's selling. The sky is falling, but it's a turning point. Catches traders off guard really quickly, gets back to that high, and continues trending up. It creates a swing low too. Oftentimes that smash theory idea is a part of a swing point. You're going to see that. If you study it long enough, you'll see. And we got the bond yields still ranging, but we're going to start seeing this trend. If the dollar is going to decline, the yields are going to decline too. We got the futures, same thing, swing high broken with a fair value gap. That's my favorite entry on the 1 minute time frame for those that know. I want to see if it's going to come up and take out that swing high. So let's bring it back to the EU. Again, I want to see if price is going to continue to push up to this swing high up here. That's where I'm looking for. I want to see if it gets up there. Now, this could be a smash candle sell idea that's forming out. I'm not saying it's not. It's a possibility. It's a signal. It's up to you as a trader to take that signal and risk properly. You could have been selling at that candle's low, this daily candle's low here, for that Larry Williams smash candle sell, and look at the hold for lower price action and a premium. But already for the month of August, this thing is up in a way. The only best buy was down here, right? The pinnacle of all trades or buy opportunities was the first day of August and the second day. Only these 2 days were the discounted buys and pushes up. So you got to be attentive. To catch some of these plays, you really got to be on your P's and Q's. And this was also a smash candle. I'm talking about smash candles all throughout this episode here. This is a smash candle here. This candle closes below lows, also takes out sell side. It's in a discount. Price gets back to that high. It blows all the sellers out the water. It smashes all the sellers. Anybody that was selling and has a stop loss above any high or swing highs or clean highs, this next candle reverts back and smashes these candles all the way up to the upside. So let's see if we can get that same idea here after this down close candle, see if price is going to push up. Now, for the traders that don't have time, intraday, what would you do for Friday? Look for price to drop below the Asian session low. That's a buy opportunity. Buying below the Asian session low. These are characteristics for buy opportunities, right? Buy below London Open, 2 a.m. Open. Buy below 7 a.m. Open, New York Open. Or even possibly, if you had a chance of the continuation, buy below buy below 10 a.m. opening price, London close. So you got 4 opportunities to go long intraday. But for those traders that don't have that time to sit intraday and sit behind the screen because you have other people that depend on you, or you have a job that depends on you, etc., you use these down candles and use the buy limit orders and buy stop orders. They will be your friend if you don't have the time to sit down and watch those kill zones. Peace.